Welcome back. I'm Pratap here. Today is 23rd November 2023. Today's session is going to be a very interesting session. Let us try to understand the psychology of a trader at the time when a trade is stopped out. That we discuss at the time when we discuss about the stock IRCTC. In the same stock, we will also discuss about the bull trap. And apart from that, let us also look into all the trades we got for the last 2 days, because I haven't recorded the video for the last 2 days. So for the reference purpose, let us quickly evaluate the performance of our high liquidity zones for the last three trading sessions. Even before that, look into this Nifty chart. See how this pro gap area is holding the prices. This is the first time, this is the second time, and recently the third time, a little deep inside the gap area, the prices are moved. And even today, the same area compared to our previous, the swing high. Now also exactly the same area, prices moved, and then from there it came down. So we have a very strong. But demand is also, you should understand how the demand is keep on increasing within the supply area. That's why slowly the entire supply demand is consuming the supply. That is what you should observe. Previously it took only 7 candles prices to reach from this gap area till this weekly demand zone. Now what happened? It took almost 20 candles to reach this professional gap area once again. So demand is moving very slowly. But how long this demand will continue is a question. Suppose if this demand captures this entire supply within this gap area, definitely most of the demand will be consumed, and thereafter again there is one more gap, professional gap from the daily. Here this professional gap is from 75 minutes supply zone, and this professional gap is from daily supply zone. It will be even more stronger. And moreover, this daily supply zone is a high liquidity zone. So definitely it should hold the prices. Probably a good return we get in case if prices are getting into this area. But the question is, the existing demand, probably the institutions will be buying in the coming days. Is it good enough to enter into this daily supply zone, or this 70 supply zone will itself will capture the entire demand and again it will push the prices down? That we have to wait and see. But these are some important observations you should make in terms of demand and supply in the market. Now let us look into the trades. Even before that, let me show you the reports, the previous reports for the reference purpose, because I have published the reports only in the Telegram channel for the last 2 days because I am not available. So I will show you those reports so that quickly we will look into the reports and we will see what kind of success trades or failed trades we got from these reports. Even before that, we already published a report in the YouTube channel on Monday. So in that, the high liquidity zones from daily time frame and 75 minutes time frames are not executed on Tuesday. Now let me show you the Tuesday's report and then Wednesday, that is yesterday's reports. This is a Tuesday's report we generated on 21st on daily time frame, stocks near the demand zone. So we don't have any high liquidity demand zones in this list. We have one stock, SBI, and high liquidity, but it is already pierced. We never considered pierced zones for our analysis purpose. So from this list, we don't have a high liquidity zones. Now let us look into the stocks near supply zones on Tuesday. So we have Apollo Tyres, and then we have Lalpath, lab. These two are high liquidity supply zones, but none of these zones are executed on Wednesday. So we didn't get trades from this list. And RBL Bank we are not considering because it is a pierced zone. That is what you should observe. Now let us look into 75-minute zones. I published at Telegram channel on Tuesday. So this is the 75 minutes demand zones. On 21st we published. And what high liquidity demand zones we have from this list. Britannia is there, but it's not executed on Wednesday. So we have only one high liquidity demand zone which is not executed on Wednesday. Now let's look into the supply zone that we published on Tuesday. So on 21st, the 75 minutes supply zones near the 75-minute supply zones. So one is Astral, which is not executed, and granules. Granules, we got a trade. We got a good profit. So before we look into the granules, we have one more IPCL lab, which is not executed, and moreover, we are not considering IPCL lab because of its risk reward. The risk reward is not at all acceptable. So that's why we rejected this. So we got one stock, a successful trade, granules. Let's look into that. This is the trade on Wednesday, not today. So this is a 75-minute zone. It's not a daily high liquidity zone. So we have to move to 75 minutes time frame. So this is the zone. We have a rally, we have base candles, and we have a drop candle. So inside we have fine-tuned to 15 minutes level. We got two beautiful 15-minute zones inside this. This is the most recent one, and this is on the top of that. And in this recent 15-minute zone, inside this high liquidity 75 minutes, we got a trade on Wednesday. That is yesterday we got this trade and reached the target. Around 9:30 15 minutes candle, we got the entry, and 11:30 15 minutes candle, it reached the target. And it has given 12,900 rupees profit, which is 7.5% return on the investment. So that is excellent. So this is from our the executed trades yesterday as a reference from the Tuesday's reports. Now what about today? So today we have to refer yesterday's reports. So yesterday also I published the reports at Telegram channel. So those who are not looking into the Telegram for your reference purpose, let me show you those reports. Then we will analyze those stocks. That is what we are supposed to do in today's session. Okay, these are the stocks near demand zone from the daily time frame. So this is the report, our yesterday's report, published yesterday. So how many stocks are having, high liquidity stocks we are having from this list? Two high liquidity zones. One is Ramco Cement, which is a fresh zone, and another one is a UBL, which is already tested 2 times. So let us look into both these stocks at the time of evaluation. Just I am showing you because this list is not there in the YouTube channel. I am showing you these stocks. So we got 2 high liquidity zones from daily time frame. And what about daily time frame? How many supply zones we are having? So this is on 22nd we have ABB is there, BEL is there, I'm sorry, this is supply zones, right? That is what all of a sudden I surprised by seeing this because I didn't look into this ABB. All of a sudden I'm wondering how ABB came. Actually, we have to look into the supply zones. These are all the daily stocks near daily supply zones. So ABB is not a valid supply zone. So we have a BEL is there, a valid supply zone, high liquidity, counter trend related supply zone. And then we have Bharat Forge, that is also a valid high liquidity supply zone. I am saying valid because they are not pierced. So we got two supply zones, and then Lalpat Lab, this is the third one. So we have two valid supply zones from this list on daily time frame. We will look into these stocks. Two demand zones and three supply zones, total 5 stocks from daily time frame. Now let us look into 75 minutes reports also. So this is 75 minutes demand zone. Nifty Bank is there, but it is pierced zone, so we don't consider this. Generally, we don't evaluate indices except Nifty and Bank Nifty. So if it is not pierced, we would have looked into this zone. We have ICICI Prudential from 75 minutes time frame. Let us look into this. We got a successful trade from this. That's it. We have only one high liquidity demand zone from this 75 minutes list. Now let us look into high liquidity supply zones from our yesterday's report. That is 75 minutes time frame. So 75 minutes high liquidity supply zones. Look into the supply zones. Nifty oil and gas, this is an indices, we don't look into this. So we have Astral. Let us look into this. Narrowly we missed the trade. Just 1 rupee difference. Otherwise it would have been a good trade for us. That we will look into the chart. This is one. IRCTC. This is the main discussion for our today's session. Let us look into this. Lot of learning from this. So this is the second stock. So total 16 we found. There is one more. 17, 18. No, high liquidity. So we found only 2 high liquidity zones from this 75 minute supply zones. And both the supply zones we will look into. them. So now let us evaluate all the stocks from our yesterday's report. We have already looked into granules. That is from our day before yesterday's trade. List. So the first one is Ramco. So let's go to the daily time frame. Is Ramco is daily? Yes. It is a daily demand zone. It is a high liquidity daily demand zone. It is a fresh zone. Prices haven't reached into this zone. But I don't know how many of you remembered. There is a concept called entry buffer, which I explained a few weeks back. Already we got clue. First clue. Even second clue also we got. What is the best way to understand? You just take a trade if the risk management is within your permitted level. If it is not within your permitted level, you go to the lower time frame and draw the zone. That is what I did here. Let me delete this zone. I already told you, you should, when there are entry buffer, based on these rejections you can identify. That is what I explained. In case if you did not listen the video, please go back and listen. It is a very important concept. Many times you get a lot of profits just because of this. Prices won't enter into high liquidity zone. Entry buffer concept itself will give you so many trades. Maybe 3 times, 4 times. Today's trade is the 3rd time. Okay, where is our zone? Here, this is our fine-tuned 75-minute zone inside this. So can you bear from the blue color line to the distal line of the 75-minute zone? Can you bear the risk? No, we cannot bear that much risk. For that, what is the solution? One solution could be go to the lower time frame. Mostly you find some lower time frame zone near this blue color line. So let us go to the lower time frame. Before that, let me show you 75 minutes how I fine tuned. Here we found two 75 minutes fresh zones inside this zone. This is the place where actually you want to take a trade on these 75 minutes. But prices are not entering because of entry buffers. Most of the times entry buffers doesn't allow you to enter the prices, get into these high liquidity zones. Remember, entry buffer concept is specific to high liquidity zones. So this is 70. So what I did, I went to 15 minutes time frame. I looked for a zone at blue color area. So there is no 15-minute zone is available below this blue color area. I mean blue color line area. Above is there. We don't have any interest on the above. All these zones are not useful at all. The one near the entry buffer area. How do you identify the entry buffer area? Just before this high liquidity zone, the price rejection. The first rejection is itself is a clue. Second rejection is a strong clue. It is even a much stronger. It is confirmed, 100% confirmed. There is an entry buffer. So what I did, I went to 5-minute zone. So here we identified the 5 minutes time frame. The leg out candle is not very great, but okay, we can consider such kind of leg outs when the demand is very, very strong. So let me change the color to demand zone color, that is green color. So this is the 5 minutes demand zone. Look into the leg out. The moment I zoom in, you get better clarity. This leg out is sufficient enough to confirm this is a zone. Don't compare with the leg in. There is no rule that a leg out should be greater than leg in. There is no such rule. Your leg in is dominating. That's why you may get a doubt. Can we consider? Yes, we can consider. And moreover, it is at the entry buffer area. Why we want? Because to confirm the stop loss, because the risk is very high. From here till this low of this 75 minutes, see how much risk. Can you bear this much risk? Can you bear this much risk? No, you cannot. That's why what you did, you identified a 5 minutes area. Now you minimized the risk. In case if any reason, if this entry buffer area is stopped out, okay, you will come out with this small loss. Then again you accept your next trade when prices are entering into this 75 minutes. Again 75 minutes you will fine tune as per your risk management. You know how to do that. So now we reduced our risk. And now get into this. Today's price. See, today prices entered and the target up to the 15 minutes supply zone area. This is the 15-minute supply zone area, because we know most of our intraday targets will be for high liquidity zones. Intraday targets are not 5 minutes. Most of the time the intra targets are 15 minutes level, because that is the power of our high liquidity zones. Basically we are getting short term return during the intraday. You should not forget that point. Why we are focusing on high liquidity zones? Because they are giving us more profits. Failure rate is also very negligible failure rate. But success rate is high. Not only success rate is high, the profits returns are very huge compared to normal intraday returns. Generally, people will satisfy with 2% intraday returns while doing intraday trading. But we are getting around 6% return on the investment. Because our daily average itself is around 6.1%. So let me go to the 15 minutes time frame and show you. So this is the target. We have a ERC candle, leg in, and then we have base candles and leg out. And today prices reached. At what time we got this? Around 11:45 minutes candle, we got the entry. 11:45 and 12 o'clock. Within this 30 minutes level, the prices were in this zone. We got a very good entry. And after that, when it reached the target at 12:45, just in 1 hour, it has given a profit of 8,500 rupees, which is 5.739% return on the investment. Okay, it is a little less than 6.1% return on the investment, that is average return, but 5.739 is an excellent one, close to 6%. So this is one successful trade. Now let us look into the next trade. The next stock, UBL. So prices did not enter into this fine-tuned area. So UBL trade is not triggered. We have only this very deep, it is there. The deep entry only we have to look for this stock, because it is already tested several times in this zone. Next one is BEL. Let me show you something here. Look into the structure of the BEL. It is a fresh zone. The 75 minutes time frame, there is no clarity here. You may ask, what is this candle? This is on Sunday, on Diwali day, the candle. That's why the structure, some kind of disturbance is there in this structure. See, even then, see the rejection. The moment it reached the zone, see the rejection. So here almost 139 rupees 15 paisa it gave the entry. 139 rupees 85 paisa. But still, for your trading point of view, where to take the entry from the 75 minutes? Where is our zone, 75 minute zone inside this? It is missing. Then can we go directly 15 minutes and 5 minutes? That is very aggressive. If you want to go for an aggressive trade, there should be price action close. Entry buffer is one example for aggressive trade. We have other types of other aggressive trades based on the price action close. We already took few aggressive trades earlier, successful trades, based on the price action close. But here 75 minutes is totally messed up. That's why I am not comfortable with this stock at all. Why should unnecessarily take risk if you don't have any other stocks? You are doing manually, you are doing analysis, you don't have a software. You did a lot of hard work and found this stock. Okay, at the time you take some risks and you go for the trade. But we are already having a software. Without any effort, just with one click, every day it is giving us so many high liquidity zones. So why do you want to take a trade on this zone when it is not clear at all? So that's why I didn't analyze this stock at all. Just want to show you why I rejected this. Even if you go to 15 minutes, so what kind of structure you have here? You have a leg in, you have a base candle, and you have a leg out. Don't think this is a base candle, or don't say it is a drop candle. It is a hidden. This candle is having hidden body. I already explained in one of our earlier practical sessions in the training program. Those who do not know about hidden body or hidden zones, please refer our training videos, last two training videos, the practical session training videos, so that you will be able to learn. Anyway, in the advanced strategies, I will explain once again this as part of our third phase of our training. I will explain once again. There I will give more examples. In detail we will discuss. But still I gave you an overview in both those videos. So here you can draw a 15-minute zone by considering this is, because if you zoom, you will get better clarity. In case if you don't want to consider this as a leg-in candle, see how many base candles, 1, 2, 3, 4, 5, 6, this could be our leg-in. This is also ERC candle, failed ERC candle. See the length of this candle. That's why the clarity is not there. Even 15 minutes also there is no proper clarity. Here you can find one 15-minute zone. Rally, 3 base candles, a rally. But it is already tested. See here. This is already tested. That's why by considering all these things, I did not feel any comfort with this zone. Remember, this is important learning. The reason why I am explaining is not about the trade. It is about your learning purpose. Sometimes why you should reject certain stocks. That kind of understanding everybody should get. That is my intention behind explaining all these concepts. It's not just learning demand and supply zone and by heart some principles, and if you go for trading, you won't get success at all. You have to fine-tune your brain. Not only fine-tuning the zones, fine-tuning our brain is also important. And when we can do that, when you are observing every scenario very in a careful manner. If a zone is failed, you should know the reason why a zone is failed. Okay, zone is failed, my stop loss hit, today I lost this much amount. If you feel like that, you never learn anything. Future also, so many trades will fail. We have to analyze in deep. You should try to find the reasons. At least 90% scenarios, you will be in a position to tell the reasons behind the failure. That is what I experienced. When a zone fails, I always want to know the reason behind that. That way I did a lot of analysis, that way I learned so much. That's why today we are in a position to tell what kind of zones will fail. Previously also we discussed in 4 to 5 different videos in our analysis. Even well before itself we told this zone is going to fail. That is what happened. Next day again we discussed. And I told you the reference. Yesterday I told, today this zone is failed. That day I told you why the zone is going to fail, the reasons I told. Already we have one video, a dedicated video on that. In one of our analysis videos, I explained when a zone is going to fail. A high liquidity, not only high liquidity zone, same concept you can apply for normal zones also. Those reasons nobody will explain from your normal training programs. They will tell you, okay, a zone may fail or a zone will get success. But we should know when a zone will fail, when a zone will success also we should know. That's why we identified high liquidity zones. So that is the reason why not feeling really comfort with BEL. Maybe it may get success. I'm not saying we won't get success. But what I'm saying, I'm not comfortable with this zone because I didn't have clarity on this, proper clarity. Instead, better look into some other stock. That is what I'm saying. So that is the reason why BEL, we did not find any entry today. Even though just reached the demand zone, but our goal is finding a 75-minute supply zone inside. We are unable to provide. 15 minutes we identified, but it is already tested, and moreover, we didn't find any clues, price action clues. Directly, if you want to go to 15 minutes level, definitely you need to find some valid price action clues. With that support, you can go for an aggressive trade. This is the second type of aggressive trade. The first type you have already seen, entry buffers. With the help of price action clues, without support of 75 minutes zone, without the support of 75 minutes zone, if you directly go to 15 minutes inside daily high liquidity zone, that trade can be considered as aggressive trade, the second type of aggressive trade. Like that, you can find different types of aggressive trades. When the situations occur, I will explain. Okay, BEL is not a valid trade. Next one is Bharat Forge. See, Bharat Forge already tested. We have already fine-tuned the 75 minutes. Again, 75 minutes we have fine-tuned to 15 minutes level. So we got a success here. At the time I also told you, actually we got this trade. We got intraday profit. But those who have taken for short-term trading instead of intraday, still you would have got so much of profit from this stock. Till this demand zone area, it has given a huge profit. Okay. So already we took a trade, it is tested. So we are not in a position to dare to take second test here. We take second test if it is also a high liquidity zone. We don't have any confirmation so far about it is a high liquidity zone. So that is the reason why this zone is no more valid, Bharat Forge, because we didn't have any fresh zones inside this. It may work or doesn't work, that is a different scenario. Today the prices went down because there is a 75-minute zone is available at the border of this. Probably this is having good demand here. Let me draw. So from here, the prices went down. But we are not looking into this zone. The reason is it is almost at the border and we are not in a position to accept this trade. Even prices were turned before itself. Not even reached into this. Moreover, prices went a little deep inside. We are not in a position to take a risk. So at the low of this supply zone, we are not in a position to take the risk. So by considering all these reasons, if a little deep inside a new supply zone is created, we can take. If institutions push the price up, there a little deep inside or in the middle of the zone, if they create a new supply and push the price down, then we will take the trade. At present, no fresh zones are available in Bharat Force until a new fresh supply zone created in the middle of this zone or a little deep inside. Till then, we don't take trade in Bharat Forge, high liquidity zone. Remember these points. Lalpat Lab, already previously we got one trade previously. Here. And moreover, this is already tested. Actually, the trade we have taken at the time was an aggressive trade because of this price action closed. Based on this price action close, this is an aggressive trade. That is what we discussed at the time when it happened on 17th November, Friday, last Friday, we discussed about this trade. So at present, we didn't find any zones inside. Lalpat Lab also I am not considering for trading purpose. This is not a valid high liquidity zone until a new zone is created inside 75 minutes. A little deep inside this, please look into a little deep inside. I didn't find any supply zones a little deep inside. These are all the reasons for not selecting this stock to consider a valid trade. When we consider a valid trade, if prices go inside and institutions create some new supply inside and push the price down, next time again prices retraces back, at the time we take the trade. Until that time, until institutes creates a new 75 minutes supply zone inside this zone, until that time it is not a valid zone. If institutions don't create a new 75 minute supply zone, next time this zone will be broken easily. If at all any supply, a considerable supply is there in this zone, in this 15-minute zone, if I am not wrong, this could be some 15-minute zone. If there is a considerable supply, probably again it will push the price down. But we don't take the trade. It is already tested. And it is not yet confirmed as a high liquidity zone. This 15 minutes is not yet confirmed as a high liquidity. So that is the reason why we don't consider this for our trading purpose. Already once it is traded and we got profit, that is enough for us. And next one is ICICI Prudential. Today we got, this is the 75 minutes zone. This is not a daily high liquidity zone. This is a 75 minutes high liquidity zone. But the risk is very high. Generally what we do, we fine tune at 15 minutes level or 5 minutes level. So what I did, I went to the 15 minutes. Here in 15 minutes area, we have a zone is available, drop, base, rally. But risk is high. So for that what I did, I again went 5 minutes level, exactly in this area. We identified this demand zone. And moreover, this is the origin for this entire move. This is the origin. And moreover, this 5 minute zone is a high liquidity demand zone. 5 minutes level high liquidity demand zone. See how it is holding the prices. So that is the reason why the prices entered into this zone. We can take an entry here and reach the target. Which target? 15 minutes. Targets always we are keeping at 15 minutes level. We have a drop, base, and then we have a ERC candle. This is expanded, see the range of this candle. So we can consider this candle as a leg out. Even though it doesn't have sufficient body, still we can consider. So when we got the entry, today at 11:45 candle, even 12 o'clock 15 minutes candle, and 12:15 candle it reached the target. And remember, this target is also small target. When there are small targets, mostly trades will be completed within half an hour or 40 minutes time period. Most of the trades, when the target is, when the range of the target is a little smaller than generally what we get. So that is the reason why the profit we got is 4,650 rupees. and which is a 2.94%, that is close to 3% profit only we got. It's a small profit compared to our average intraday 6.1, but still close to 3% is a good profit. Profit is a profit. You have to enjoy, whether it is small or big, right? Okay, the next trade. Just missed the trade today because of just 1 rupee 15 paisa. First, let me go to the 75 minutes time frame. This is a supply zone from our list. We have a rally, we have a base, and then we have a drop. And today, just in this candle, look into this 9:15 candle. 9:15, 75 minutes candle. How we fine tune? Let me go to 15 minutes time frame. In the 15 minutes time frame, we have a rally, base candles, and drop is there. But the risk is even more. If you consider from here to till the, so what I did again, went to 5 minutes, I'm fine tuned. Now we got an excellent one. Drop, base, drop. 5 minutes. So risk is also minimal. Now if you want, you can extend till the end of this particular 75 minute zone. It is a manageable. Sometimes what we do, if the gap is very little, if the risk is manageable, we will fine tune because we don't know, we don't want to take the stop. Sometimes the prices go a little above the 5 minutes and again it will come back. So that's why not to get into that situation, we just increase the risk. Maybe some more, few more rupees, maybe another 200 or 300 rupees extra risk you have to bear. If the gap is minimal, so at the time you can follow this technique. If you feel the gap is very considerable, if you are assuming if this gap is a considerable, really its value is high, at the time you have to manage yourself with this minimal risk. If the risk occurs, you have to exit from your trade. There is no other choice. But most of the time what we do, we adjust the risk till that 75 minutes distal line. Because entry level we already reduced the risk. Because we reduced the risk at the entry level, today we missed the trade. Okay, 75 minutes point of view, it is an entry, but we don't take our trades like that because risk management, our risk management is very, very strict. Strictly we follow. So even though the trade is missed, but it reached 15 minutes target. This is the 15 minutes. We have a rally, base, and then we have a rally candle. This is what hidden zone concept I explained in the last training video. In our last training video, I explained the hidden zones. This should be considered as a rally candle because there is a sufficient gap. So till the close of this, you have to add the body. By adding, once you add the body from this gap to till the close of this candle, you will be getting a rally candle. Institutes will create such kind of hidden zones. See how this demand zone is this. I told you, such kind of hidden zones, most of the time it will work. See how it holded the price today. This is the first time, this is the second time. Even next candles also, they are not unable to go inside. What I am feeling generally, when institutes creates a zone like this, next time, maybe the next day, easily this demand will be broken. Who knows, this entire high liquidity 75 minute zone will be broken. They are very dangerous. Institute creates such kind of zones. You may not be thinking it is a zone, and we won't take this concept seriously. And when prices are entering, we take one more trade, but it will be stopped out. So be careful. Hidden zones are very dangerous. So that's why I'm thinking maybe who knows, tomorrow this entire zone will be broken. If prices are entering into this, taking a trade is risky. But if you feel the amount is very small and even if you lose, maybe you can take a risk and take a trade. But we should be careful. If this zone is not holding the prices, then we need not worry. When prices are going back, we can take an entry inside this. Now this zone is holding the prices. Most of the time, when we draw the zone, what happens? It will reach the target, it will give us profit. After that, prices again will break by end of the day. We have seen many examples. At the time, you might have thought, instead of taking the target here, we would have taken a little below this. But the reality is not like that, right? But today what happened? This zone is not broken. Many times I observed when if a zone near the high liquidity zone, a new 15-minute demand zone is not broken, most of the scenarios I have seen, the next trading day, with a gap, institutions are breaking these high liquidity zones. Previously we have seen for Dr. Reddy Labs. Dr. Reddy Lab, we got a successful trade. So it reached our 15 minutes demand zone. We got a good profit few days back. Maybe last Monday we discussed this trade, if I am not wrong. So we got a profit. But that day what happened? The demand zone holded the prices. It reached the target, we booked the profit, but it holded the demand zone. Prices didn't go below this. And next day trade, that is I think maybe Tuesday, if I am not wrong. Or if it is Friday, maybe Monday's trade. What institutions done? With a gap, they pushed a large candle. The entire high liquidity zone is broken. Why I am saying? Generally, at supply zones, supply should be very strong. The strong supply should easily break any small demand zones are there. Small means 5 minutes, 15 minutes level. And if that small demand zone is holding the prices, what does it mean? As new supply and new demand is added, probably the goal of the demand zone is to break this high liquidity zone. So this is how institutions' mindset will be there. Exactly the same way we should also think. That's why understanding the price action is very, very important. You should not look into the demand zone and supply zone, just their zones, they are providing entry and exit for us. You should not think like that. You should try to understand how with respect to these demand and supply zones, you should try to understand the price action. What these zones are doing. Are they holding the prices? That means there is a fight is happening between a 15-minute zone. This is looking like a 15 minutes normal zone at this point of time. It is not confirmed as a high liquidity so far. This 15-minute zone is fighting with a 75 minutes high liquidity zone. And when it is possible, if institutions created with so much of demand inside this, that means so many pending buy orders with this, then only it is able to fight with a high liquidity, higher time frame demand zone. That way you have to think, and then you have to keep an eye on this zone. You should be more careful when you are taking your next order. If you ask me, I will be very careful next time to take this order. It doesn't mean it won't success. Maybe it may success. It may have even more supply than the demand, the newly created demand. But you know the problem what happens? Maybe the zone won't fail, we won't get our required target. What we want faster targets. We want around 6% targets. That we will be able to achieve if there is no hurdle. If there is a hurdle, what happens? We miss such kind of big targets. So that is what happened to ICICI Prudential today, right? We got a very small, only 2.94%. That is close to 3%. Written on the investment only we got. Because there is a hurdle near to the high liquidity zone. So this is one important lesson from this astral trade, which we missed narrowly today. And now let us get into our main discussion, IRCT trade. IRCT is just 75 minutes. This is a 75 minutes counter trend trade related. We have a ERC candle. We can use it as a leg in, and then base, and then we have a drop. Actually, what is the trend of this stock? Uptrend. And here there is a demand. Let me draw. So this is a demand zone. And who broke this demand zone? This supply is broken this demand zone. This supply broken this demand zone. While breaking this demand zone, what happened? This supply got zone achievement. Okay, that is a regular your demand and supply zone concept, you know. Not only zone achievement it got, it also changed the trend. Uptrend is changed to sideways. Why I am explaining this concept? Now I am going to tell you few important points about counter trend trading. So let me delete this demand zone, because by breaking this demand zone, the supply zone got the achievement and also changed the trend to sideways. You know what most of the people in the market, what they do? When an uptrend is changed to sideways, and what is the next sideways will be changed to downtrend. This is what most of the people's assumption. I'm using the word assumption. Okay. So what they do, next time when prices reaches into this supply zone, they take the counter trend trade. Why they take the counter trend trade? Because the trend is changed at the higher time frame. What is the higher time frame? Here 75 minutes. What is the lower time frame here? Maybe 15 minutes or 5 minutes. There we take our actual entry. That is what here I fine tune to 5 minutes level. And we should have taken an entry here in this 5 minute supply zone. Most of the times these trades will work. This kind of setup trades will work. And they give huge returns also, because when a trend is changed at the initial stage of trend change, if you take a trade, what will happen? In the entire move, you will keep on getting the profit. Most of the people, you know what they do? They hold it for a longer period, because at the initial stage they are taking the trade. Because they are taking the trade at the initial stage, and if the zone is successful, definitely assume the prices are moving down. This entire thing is a profit. And where you took the trade at the early stage you have taken. After that it will create so many supplies and it will break so many demands. Many people try to get maximum profits like this only, by going with counter trend trading. Counter trend trading will be done at the initial stage of trend changes in a time zone. But, again I am saying but, I clearly explained in my trend training video. I don't know how many of you attended the trend training. In case if you don't, please attend. I took nearly some 4 to 5 sessions only for explaining the trend related concepts. Trend is such an important. At the time I told you one important point. There is no rule that If an uptrend is changed to sideways, sideways will be changed to downtrend. There is no rule like that. Sometimes, if not sometimes, at least considerable number of times, uptrend is changed to sideways. Again from sideways, the trend is again changed to uptrend. This is such kind of classical example, this particular chart. What happened? By breaking this demand zone, by breaking this demand zone, what happened? Trend is changed to sideways. Now earlier the trend was uptrend, it is changed to sideways. Now what people will think? Okay, now trend is changed, now easily now next trend will be changed to downtrend. And then they take a trade on the supply zone. Now what happened? Again this supply zone is broken, sideways is changed to uptrend. On 75 minutes now the trend is uptrend. Why? Because this is pierced. The moment a zone is pierced or completely violated, the trend will be changed. So this is the reason why we should be very careful about the trend changes. If you are considering trend changes at the lower time frames every time, like 75 minutes and below, okay, 75 minutes some extent okay, but even below, that is 15 minutes, 5 minutes or 25 minutes, in all these time frames, trend changes will change drastically. From daily and above, at least some stability will be there, because they are longer duration things. It takes some time to change the trends in a reversal way. Below 75 minutes, it is faster, but 75 minutes, it is in the exactly middle. Sometimes it will hold, sometimes maybe it will not hold. Holding means uptrend to sideways, sideways to downtrend. That is what the meaning of holding the trend means. That means it's continuing the trend as per process. But most of the times what happens? Below 75 minutes time frame, uptrend to sideways, and immediately sideways to again uptrend it will move. Of course, downtrend also it will move. But the probabilities are like 50-50. We don't want such kind of 50-50 chances. We want something like 80%, 30% level. Chances we want as per the probability theory. So this is what happened to 75 minutes today. Now the sideways is changed to uptrend. That way the stock is stopped out. Okay, now we are entering into the psychology related discussion. So when a trade is stopped out, your trade is stopped out, what you will do? How you behave on that day after the trade? Do you get the fear? Or do you want to take one more trade in some other stock? Or do you want to take one more trade on the same stock? This is a very, very important. All these questions are very, very important. I have seen many people, they give advice. What is the advice? If your trade is stopped out, you take rest. Don't look into your system for the next 3 days or 4 days. Make your mind fresh and then again come back and do the trade. Have you heard such kind of advices from anybody? I am sure majority of us might have heard such kind of advices. Maybe the next day you might have got an excellent trade and you are supposed to get a 10,000 rupees profit, which could be a 8% return on the investment during your intraday. You will be missing the trade opportunity because we are taking rest, because of listening some advice from somebody. So that should not be the case. Stop loss should be part of our trading system. We have to accept that. The day when you get 10,000 rupees profit, you enjoyed. The day when you get 1,000 rupees or loss or 2,000 rupees loss, can't you bear that risk? Are you not in a position to accept that? Are you not in a position to saying it is part of the trading analysis or part of our trading system? Are you not accepting that still I have, okay, previous day I got 10,000 rupees, now I lost only 2,000, still I have 8,000 rupees profit, I am happy. Are you not in a position to convince your mind like this? See, you should always try to motivate yourself. You should not run away from the trading system. Why we want such kind of, why you want to listen such kind of negative advices? Maybe that advice is applicable in rare scenarios. Something happened to the market. Entire world, something wrong happened. Something bad happened to the entire world all of a sudden. Because of that, the whole market is crashed. Even if you want to exit, they are not giving you a chance. Prices moved far away from your stop loss. That day you got heavy losses. Yes, definitely it will hurt any human. Definitely you may need some break at the time if we lost completely our control. It might happen. I am not saying it is not possible. Nobody is perfect. Maybe that advice is applicable on that day, but same advice if you are applying for every trade and if you are running away from your trading system, that doesn't make any sense. Losing a small risk, that is already you prepared and you took the trade. What is the main advantage of our demand and supply zone? The beauty of the system is before taking your trade, it is telling you this is the loss you are going to bear if something happens against our analysis. You prepared for that and then you took a trade. Why narrowly we missed the trade in Astral today with just a gap of 1 rupees? Because we prepared with such kind of risk. If prices enters into that, then only we want to take a trade. Generally, you give relaxation like maybe some 20 paisa, 30 paisa or 50 paisa before your actual entry level, you take trades because you don't want to miss the trades. But a considerable value like 1 rupee, 15 paisa or 2 rupees, 3 rupees, you can't increase your risk just like that. Okay, if it is a 10,000 rupees stock, probably you may add some another 5 rupees or 6 rupees before that as your buffer entry. At the entry level, you add some buffer value. But small stocks, small prices like 1,000 rupees stocks, probably you will add some 50 paisa, 60, 70, maximum 1 rupee for 1,000 rupee related stocks or 2,000, 3,000 related stocks. But here the point is, when you get the loss, it is well defined before itself. You know that this is what going to bear the risk. This is what going to be our loss. These many rupees you are going to get loss. You know well in advance because you know what is your entry, you know what is your stop loss. The difference of entry minus stop loss, your loss. For one future slot, what is its value, you know. If it is your options trade, probably based on your strike prices and premium or other parameters, you know what is going to the value you are going to lose. By considering all these points only, you are taking a trade. When you got a minimal loss, a small amount, why should we run away from our trading system? Again, we have to look for, is there any other opportunity available? That is the way you have to analyze. That is the way you need to fine tune your system. For every small things, we should not run away from our trading system. Remember, moving away from your trading system and staying away from your trading should be done only in special scenarios. not for hitting the stop losses. If the stop loss is hit, you have to accept, that's it. How much loss we got for IRCTC today? We just got 1094 rupees loss we got, that's it. Which is less than 1%. It is 0.9%, 929%. That means nearly 0.9% loss we got. Or you can say close to 1% or a little less than 1%. Anyway, you accept, you define your risk up to 2% level. As per the risk management system, maximum up to 2% level we can accept the risk. For this trade, for IRCTC, it is even less than 1%. Maybe if it is not IRCT, if it is some other stock, you got 2%, probably you would have got 2000 rupees profit, loss you might have got. But when you get a profit, you got 10,000 rupees profit or 9,000 rupees profit. Or worst cases, most of the time, many of the stocks, you are getting at least profits around 7,000 and 8,000. And many times you are getting success only. This is the second failure. That means I would not say failure, it is stopped out. Second stopped out during this month. During this month, we have more than 30 successful trades. We have more than 30 successful trades during this month. This month is not yet completed. We have few more trading days are there. Last month we have around 28, if I am not wrong, around 28 stocks or close to 30 stocks. Successful trades are there last month. Only one stock is stopped out. This month we have again another 30 plus stocks are already or close to 30 successful trades we have this month. In that only 2 are stopped out and 1 is stopped out because of my mistake, my wrong analysis. Otherwise we would have avoided the trade. But even I considered. When you have such a huge success, why should we run away from our trading system? Why should we relax for next 3 days or 4 days? Maybe immediately the next moment itself you might have got an opportunity. That is what happened in IRCTC. Anyway, you have fine-tuned at 15 minutes level or 5 minutes level. So let us go. Let us go to the 15 minutes time frame. See here, we have already fine-tuned this. We have a drop, base, a drop, and this is stopped out. This is supposed to be the target. Actually, this is also a target. Which one? This rally, base, rally. This is a rally candle. You have a hidden body and we have a large wick. Both together it is a expanded range candle. And if you add the body, hidden body, this candle is having sufficient body to qualify the leg out, including this entire range. Now clearly a little above this entire 75 minutes, just on the top of that you are seeing another zone. 15-minute supply zone. And this is called bull trap. We have discussed about bull traps and bear traps several times. In case if anybody missed, for your benefit, I will explain once again. Generally, how you find the trap? just above the supply zone if it is the short trades, or just below the demand zones if it is the long trades. And which time frame you will identify? Lower time frames. If your 75, if your zone is 75 minutes, immediately next time frame, or even one more time frame below, anything it is possible. Because this is a 75 minutes, the next lower time frame is 15 minutes. You can find a trap. Or 5 minutes also you can find a trap. That is also possible. In this concept, we have both the traps are there. This bull trap is there. If you fine tune, inside this bull trap, there is a 5 minutes trap is also there. Let me show you. So here we have a 5 minutes trap starting from here till this place. We have 1, 2, 3, 4, 5, 6 candles. We have a rally candle, we have a base candles. So this is again going to be almost equivalent to 15 minutes time frame related zone only. But I am just trying to tell you how you can find the traps. Just a little above, a little above. There won't be huge gap between these two zones. Even if I include the wick, see, almost both these zones are overlapped. Don't say this is LOTL. This is not LOTL concept. LOTL is within the same time frame. But here time frames are different. And this is a 15 minutes time frame. The zone you are seeing below is a 75 minute zone. Inside you find your 15 minute zone, that is a different story. But this entire zone is a 75 minute zone. Just above that we have a bull trap, a little overlap is there both these. And if you further fine tune for the risk management point of view, you can see a little gap between these zones. But in reality, they are slightly overlapped in this example. Maybe in some other example, even wick to wick if you draw, there could be some small gap between this higher time frame zone and lower time frame zone. Traps will be identified between different time frames. Please remember, LOTL will be identified between the same time frames. Traps will be identified between different time frames. Some people also call this as a decoy, another name. Okay, but bull trap and bear trap we have to understand with the terminology. That's why I am calling it as a, instead of decoy, I am calling it as a bull trap or bear trap. If a small zone, lower time frame zone is a little above the higher time frame zone, that lower time frame zone is called as a bull trap if it is above the supply zone. Similarly, in below your higher time frame demand zone, in the lower time frame, very close to your higher time frame demand zone, if you have a smaller time frame demand zone, that is called as a bear trap. Okay, why we are calling this as a bull trap? That means we are trapping the bulls. Who are the bulls? Buyers are called the bulls. Who is trapping these buyers? Sellers are trapping. Sellers means supply zone. Then where is the demand zone here to identify the buyers? You need not be having a demand zone to identify the buyers. There is a stop loss hit. Earlier you were a seller. Because there is a stop loss, now all of a sudden as a seller you become buyer. You stopped out, right? So your orders will be captured by these institutions. This zone is there. The pending orders, see now I have drawn wick to wick. All the pending orders within this supply zone, in this whatever we are calling bull trap at the lower time frame, the 75 minutes stopped out orders are all captured by these 15 minute zones. The 15 minutes pending sell orders are keep on consuming. So whoever stopped out, they have been executed their orders, everything is consumed here. Okay, risk management point of view we have minimized. This is for our entry point of view to tell. You may take a wick to wick entry. If the risk is high, you can take the next. This is type 2 proximal entry. Wick to wick is type 1 proximal entry. So wick to this body. This is the type 2 proximal entry. This is for the trading point of view, I am telling. The moment the price entered into this, you know this is a trap. Why can't you go for a short trade again, once again, another short here? If you would have gone for a short, if your mind accepts, for what your mind should accept, whatever the stop loss has already hit in this here, we have already exited from this trade. We got some loss with a loss. Your mind should accept that. Now you are making yourself ready to accept the next trade because you have seen there is a bull trap. And if this bull trap is within your risk management level, go for another shot here. Those who have such kind of mindset today, they would have got the profit. See the demand zone, this is the immediately available demand zone. At least this is the profit from this bull trap area to this one. Let me delete to bring you the clarity. See, this is our profit margin. This is our trade. Second, third candle, it reached the target. Which candle? At 9:15 candle, it reached. And in which candle? At 9:45 candle, you got the profit. This is also possible, right? You know how much profit we got here? If this is the scenario, those who have taken the second trade at the bull trap, probably they got 4,375 rupees profit, which is 3.716% profit, 3.7%, say. That is 3.7% not profit, 3.7% return on the investment, ROI. Sorry for my mistake. 4,375 is the profit, 3.7% is the return on the investment, ROI. If you deduct your loss from this profit, you know how much profit you got? The 1,094 rupees you already stopped out, right? Deduct from this profit. You got 3,281 rupees profit you got. How you are able to get this profit? If the psychology part did not affected your mind, you would have got a profitable trading today. That's why psychology, controlling your human psychology. Maybe it is easy for me to tell you. It is very easy to give advice to anybody. But there are certain facts we have to accept. That is important. What I am saying, just for getting the 1,000 rupees loss or 2,000 rupees loss, you should not disturb your mind. That is what I am trying to say. Maybe you disturb your mind if you get 50,000 rupees loss or 25,000 rupees loss. At the time, I don't want to give you any advice. I want to make you some silence. Maybe you be silent for next 1 day or 2 days. Get into normal situation and then again come back to your trading. But for this 1,000 rupees and 2,000 rupees, if you are disturbing your mind and if we are running away from our trading, what we do? Such kind of trading will never help you. The 1,000 rupees, 2,000 rupees losses, whatever you are getting, you already accepted. That is what the risk means. It is a potential loss. You know, this is the loss I may get if my trade is against my planning. If the trade is against your plan, definitely you get the loss. But you know what is the loss? You already know. That is the beauty of our supply demand zone price action. It is letting you know well in advance, this is the profit I am going to get or this is the loss I am going to get. You already prepared for that loss. If you prepared only, you will take the trade. After you prepared, again after getting the loss, if you are disturbing your mind, that doesn't make any sense. That is what you have to understand. When it makes sense, if the loss is beyond your expected, when you get a loss beyond your expectation, Next day something, that day night you have taken some, you didn't take intraday trade, maybe you have taken for delivery. That means you are holding your trade till the next day. Something happened during that night. Next day morning with a gap, with a 10% gap, the prices went down. Obviously, you have to exit with the 10%, except even though your loss is supposed to be only 1%, more than 1%, that is a 9% loss, you got additional loss. Definitely that will disturb your mind. I am not giving you advice. That day you have to forget everything. You have to sit before the terminal, look for other opportunity. Being a fellow human, definitely I can understand your feelings on that day. Maybe if you are a machine, probably without such kind of emotions, even after getting 10% loss, we will peacefully, it will work. We are not machines, we are human. I am agreeing with that. But when you have to get into the emotions or not get into the emotions, you should have a clear clarity. That is what I am trying to say. Risk means your prepared loss. Your mind has to accept if the stop loss is hit. Without hitting the stop loss, you cannot trade. Why we are working on these high liquidity zones concepts? To minimize the possible stop losses. Without high liquidity zones, definitely by this time we would have got at least out of these 50 plus tradings for the last 1.5 months or close to 2 months, whatever the 50 plus trade opportunities we got, definitely a 30 or 25 trades would have been stopped out. If you are trading as per normal demand and supply zone concept. Why I spent so many years in the for developing my software? To reduce that probability. At least, actually, with the high liquidity zone concept, my target is only 80% level. 20% failure I accepted. That means by this time, out of 50 trades, at least 10 would have been stopped out, I would have accepted. Okay, luckily only 3 are stopped out so far. So we are working with a system that is within our control so far. But at least we should have a 6 months data with us to confirm the power of our high liquidity. But so far, close to 2 months data we are having. Last month data I am published already in our group, in our Telegram group. Again, end of this month, once again I will be publishing the Excel sheet with the latest data. So we will see the results for the next 6 months. 6 months, same results if you get more than 80% success rate if you are getting. 100% we all can trust this system. So far we got initial sample. We are really enjoying the success. We have seen the short-term returns we are getting in the intraday itself. Whatever the 6.1% return supposed to get after 3 days, 4 days or maximum 5 days. That is DIT trades. The DIT trade returns you are getting during intraday with the help of high liquidity zones. Is every trade we are getting? No, not every trade, but majority of the trades we are getting. We have seen few trades, we got only 3% return on the investment or 4% return on the investment. But majority of the trades we are getting close to 6%, maybe 5%, 5.5%. But many trades we have seen even 7%, 7.5%, 8%. That's why average we are saying around 6 or 6.1%. That is supposed to be your short-term return that we are getting during intraday itself. But what about the risk? Risk we are fine-tuning to the 5 minutes level. That is intraday level risk we are fine-tuning. Risk you fine-tune to intraday level, but reward you fine-tune to short-term trade level. That is a DIT trade level. That means your HIT, intraday is HIT trade, hourly income trade. That is your entry. But your target is DIT level that you are achieving within the intraday. Such kind of trades we are executing for the last 2 months. And we have seen success, huge success. That is what you should understand. When you are getting such kind of huge profit, you must change your mind psychology. Sometimes if one trade or two trades are stopped out, they are just intraday losses, that's it. They are not DIT losses. But one trade success, two trade success, three trade success, most of the times, I am not saying always, most of the times, they are our DIT profits, not intraday profits. When you have such kind of system just before you, why you want to get into the control of the psychology related factors? You should control your psychology, your emotions, but not they should control you. Emotions should not control you, they should not control you. If they are controlling you, that's it. You should control your emotions, the other factors. That's why I forgot about taking rest by staying away from the system just because you got 1000 rupees loss for one trade. In case if anybody would have taken trade in IRCTC. That is an acceptable trade. If you would not have moved away from your system, you would have taken the second trade, and it would have been a successful trade, reached your target, and ultimately you would have got a overall 3,200 rupees profit instead of a loss. By deducting the loss, you would have got 3,200 rupees profit. When it is possible, if you would have controlled your emotions, it would have been possible today. Of course, we should know the concept bull trap and bear trap. Without knowing these concepts, you cannot go for the other trade. But we've been discussing about this bull trap and bear trap in several videos. We have already discussed in several videos. Maybe in the second phase of the training, if not second phase, third phase of the training, we will be having a separate video on this bull trap and bear trap with examples. But those who are already aware of this concept, or those who are in a position to understand this concept, even though if you are not aware, maybe you might be already having some good experience in demand and supply zone. There is nothing difficult in learning this concept. Because you are already all those people, whoever is following and doing the trades, you already know about multi-time frame analysis. People who are taking training first time and demand and supply zones, they may not be knowing about multi-time frame because I haven't introduced, that is part of our second phase of the training program. We will have a detailed discussion on that. But we learn in a different way, in a different dimension we will learn. Hope you will be able to understand how you can control yourself or how you can control your emotions. It's not a difficult thing. It is just you changing your perception, that's it. You should always feel, if I get profit, I am getting short-term profits, that is DIT profits. If I get loss, I am getting only intraday loss, that is HIT trade, hourly income trade, losses I am getting. But profits, DIT profits I am getting. And second thing, you have to understand, more success you are getting in the trades rather than the losses. The percentage of getting the stopped out orders are much lesser compared to getting success. As per my understanding, we should not get more than 80% stopped out orders as per this concept, high liquidity zone concept. If 100 trades, for every 100 trades, at least 80 should be successful trades. I'm not talking about the trades you are taking. I'm talking about our tool, whatever our software is producing. I'm talking about those trades, especially the high liquidity zones. Because I know some of you people are not still following high liquidity zones. You are following your own way. But my discussion is about high liquidity zones. So this is about IRCTC and the bull trap. Still, if you have any questions, you can put them in the comment section. Now let's get into our main topic, that is generating the reports. So let us generate reports for daily time frame, 75 and 15 minutes time frame one by one. First let us complete daily. So entry time frame is daily. Let us find the stocks which are near to the daily demand zone. So we have 5 stocks near to the daily demand zone. Are there any high liquidity zones? Ultra cement is there, but ultra cement already. Previously we executed, that is a different zone. I think that is violated. Now we got a fresh high liquidity zone. This is C underscore DZ. But remember, C underscore DZ is not as powerful as S underscore DZ on daily time frame. This concept is very powerful on monthly, quarterly, and some extent at weekly. But daily onwards, C underscore DZ is more, S underscore DZ is more powerful than C underscore DZ. But still it will give at least one trade most of the times. At least one trade it will work most of the times. Of course, there are times it will break without giving a trade. But you know how to identify such kind of zones. Go to lower time frame and see the structure of the zones. You will get clarity. That way, well in advance, we can tell this zone mostly it will fail. So always you have to do top-down analysis, not only finding your trades or not only fine-tuning your risk reward, but also to check the quality of the zone. Are there higher chances of breaking that zone? You have to. That means the zone is going to be violated or not. You have to do analysis. That is one important concept you should learn from this, from our discussions all these days. So we have only one high liquidity zone available in this list. Now let's go back. Entry time frame is a daily. Let us find the stocks which are near to the daily supply zone. So no high liquidity supply zones on daily time frame today. Okay, now let me generate quickly bullish and bearish related setups. Those who are learning first time, probably please go to the previous video and there I explain, because it is every time explaining is taking a lot of time. So please look into the previous video or previous to previous video. So entry time frame is daily. For bullish setup, let us select the demand zone and trend, because this is a daily time frame. Monthly trend should be, for bullish setup, either it should be uptrend or sideways is also acceptable. Up or sideways, and weekly must be uptrend. Daily we don't bother. And price direction is important here. This field price direction. For monthly, the prices should travel from demand zone to supply zone. Weekly also demand zone to supply zone. That indicates a 100% bullish nature. But what we are doing, pierced count also, we are avoiding pierced zones. So pierced count we are setting on daily time frame 0, 0, because we are listing daily zones. So 0, 0 pierced count. Now let us generate the report. So we got 3 stocks. Bullish setup for the stocks having demand and supply zones for all the 3 time frames. Now let's go back. Sometimes monthly may not be having supply zone. It is having only demand zone because monthly it is a all-time high zone. So what we have to do? Demand zone to ATH, all-time high. Weekly there are two conditions. First condition, monthly is having supply zone. Second condition, monthly is also not having supply zone. So that's why we have to generate two more reports. So this is the second report we are generating. So this is the list of the stocks. What this list is telling, monthly is prices are traveling from demand zone to all-time high, but weekly prices are traveling from demand zone to supply zones. Now let us look into the third scenario. What is that? Weekly also prices are traveling from demand zone to all-time high. Both monthly and weekly prices are traveling from demand zone to all-time high. We want such kind of stocks. What about daily? Daily anything will happen. Maybe some zones might be having supply zones, some zones may not be having supply zones. If a stock is not having supply zone on that particular time frame, that zone is called all-time high zone if it is a demand zone. So we got a big list for this scenario. This is the first 26 stocks in the list. Let me scroll down. So total 40 stocks are filtered. In which condition? Both monthly and weekly are not having supply zones. What about daily? See, some stocks are not having any supply zones. The dark green color zones are not having any supply zone. The light green color stocks are having both demand and supply zones. So based on this, you have to prepare your trade plans. Please remember, they are all bullish setup related stocks. See the search criteria. If you have any doubt, look into the search criteria. This is the search criteria for bullish setup for the third scenario. We have three scenarios for all the three reports we generated. So now what we have to do? We have to generate for bearish setup for daily time frame. So let's go back. Entry time frame is daily. Because it is a bearish setup, entry zone should be supply zone. What about monthly trend? For bearish setup, that monthly should be either down or sideways, and weekly should be downtrend. So we have set. What about the price direction? Here again we have three conditions. First condition, monthly is traveling from supply zone to demand zone, prices are traveling. Weekly also prices are traveling from supply zone to demand zone. And Pierced count we already said previously, that is there for daily time frame. The 00. Okay, now click on the top down strategy button. So we got three conditions, three stocks which are completely bearish in nature as per the daily time frame. I mean, it's not daily time frame. The stocks at lower time frame is daily. That is the right word. Okay, now let us look into the second scenario. What is the second scenario? The price direction. Now prices are traveling from all-time high to demand zone. There is no supply zone, but they are traveling. So let us see any such kind of. But weekly, we have two more conditions. First, supply zone to demand zone, no stocks. Similarly, we are seeing one more scenario. That is all-time high to demand zone. Mostly you may not get here also. So no stocks. Because generally, you know what happens by the time if a stock is not having any, that is higher time frame, that is monthly time frame, if no supply zone means mostly that could be a bullish stock. It may not be the bearish stock. That's why in bearish stocks most of the times you are not getting. But lower time frames maybe you may get few exceptions. That's why sometimes we are getting in these conditions lower time frame we are seeing some stocks when we are filtering. But anyway, we have to filter all the conditions. So this is about daily time frame. Now let us generate demand and supply zones for 75 minutes time frame. Entry time frame is 75 minutes. Let us filter the stocks which are near to the 75 minutes demand zone. Near 75 minutes demand zone. So 3 stocks are filtered, but none of these 3 stocks are high liquidity zones. Okay, now let us find the stocks near to the supply zones. Entry time frame is 75 minutes. Let us find the stocks which are near to the 75 minutes supply zone. These 5 stocks are filtered. Here we have one fresh 75 minutes high liquidity zone. Only one is available. And ABFRL having both demand and supply zones are high liquidity on 75 minutes time frame. If it is daily, we can confirm, we can say more number of days the stock will be moving between those zones, but 75 minutes I cannot confirm because the time frame is smaller. In a short period, one of these zones will be broken. Maybe they may give 1 or 2 entries, but the duration will be short compared to the daily. Daily you have already experienced HDFC AMC. How many days it moved between the demand zone and supply zone? Nearly 7 or 8 trading opportunities it has given, successful opportunities. That way you cannot you cannot think about ABFRL because this is not a daily time frame. This is a 75 minutes time frame. Maybe sometime it will be there, but not as long as what you have observed on the daily time frame. That is what I am trying to explain. Okay, let's go back. Not go back. Let me start in a fresh way. Now, 75 minutes. Let us look into entry time frame is 75 minutes. Let us look into bullish setup related stocks. So now the time frame is changed at 75 minutes. So HTF is weekly. So what should be the weekly trend? It should be up or sideways. Daily trend must be uptrend for bullish setup. And what about price direction? So this field, price direction, weekly should be moving from demand zone to supply zone. Daily also should move from demand zone to supply zone. And we should also set PS to count to 0. Which time frame we have to set now? 75 minutes time frame we have to set. Earlier we set for daily, now 75 minutes. So 0, 0. Is it 0 or O? 0. Okay. Now let us generate the stocks. So these 7 stocks are bullish related stocks, but these stocks on weekly and daily also they are having both demand and supply zones. Now let's go back. The second scenario for 75 minutes time frame, what is that we have to do? The price direction we have to change. Weekly, this time it is moving from demand zone to all-time high. Daily we have 2 conditions. The first condition, demand zone to supply zone, we will execute. So 2 stocks are filtered for this condition. Something wrong. Why something wrong? PS to count it is showing. Do you know the reason, the mistake we did? The mistake we did, entry zone, we are specifying either demand or supply, both are valid. One is PS to count is 0, that is enough, that is what we said. So the mistake, so we have to generate both the reports once again. Let me correct. Entry zone I did not set. For bullish setup, entry zone should be demand zone. Okay, trend already the same, but let me generate from the first report. First report, demand zone to supply zone. Demand zone to supply zone for weekly and daily. This is the first report for 75 minutes, bullish setup. Now, this is the correct one. See, the entry zone is demand zone. So you should be very careful while setting all these parameters. Sometimes we make mistakes. The report will come in a wrong way. So this is the first report. Now second report in the bullish setup, we have to change weekly the price direction from demand zone to all-time high. Daily, it still remains a demand zone to supply zone. Next condition we will see demand zone to ATH. So only one stock is filtered. Now let us generate the third report in the bullish setup for 75 minutes time frame, entry time frame 75. Now the daily also we are changing from demand zone to all-time high. Let us filter. We got a big list. There are so many all-time high stocks now. This is the first page. And this is the second page. So this is about bullish setup. Now what we do, let's go back and generate for bearish setup for 75 minutes time frame. Entry time frame is 75. And instead of demand zone, entry zone, now we are selecting supply zone because this is a bearish setup. Our entry is at the supply zone. Okay, what about the trend? Weekly trend should be either downtrend or sideways. And daily trend must be downtrend. What about the price direction? We have three possibilities here also. First possibility, supply zone to demand zone weekly, and daily also supply zone to demand zone. Let us generate. Already the pierced count is included in that previous one. So we have 7 stocks. Supply zone pierced count should be 0. Check only supply zones, because our entry zone is a supply zone. All these 7 stocks are supporting bearish setup for 75 minutes time frame. That means all these are all WIT trades. Now let us look into the second report. What is the second report? Weekly should be traveling from all-time high to demand zone, ATH to demand zone. What about daily? We have 2 conditions. First one, weekly is having supply zones, let us assume. So one stock is filtered. Now let's go back. Now let us generate third report also. What is that? All-time high to demand zone. No stocks are available. So this is about bearish setup for 75 minutes time frame. So this is end of 75 minutes time frame. Now let us generate reports for 15 minutes time frame. So entry time frame should be 15 minutes. Let us find the stocks near to the 15 minutes demand zone. So these 5 stocks are filtered. So let's go back. Entry time frame is 15 minutes. Let us find the stocks which are near to the 15 minute supply zone. So 2 stocks are near to the 15 minute supply zones. Okay, now let us generate bullish and bearish setup for 15 minutes time frame. So entry time frame is 15 minutes. For bullish setup, first one is bullish. Entry zone should be demand zone, and the trend, now 15 minutes, now your time frames are changed. What is HTF for 15 minutes? Daily. So daily is HTF, so the trend should be either uptrend or sideways. And what is the ITF? That is 75 minutes. The trend must be uptrend for bullish setup. Next one is price direction. For daily, prices should travel from demand zone to supply zone. 75 minutes prices also should travel from demand zone to supply zone, and we don't want pierced zones. Pierced count for 15 minutes we have to set. We have to, because our entry zones are 15 minutes. So the count should be 0, 0. So we have set all the parameters. Let us generate the first report for bullish setup. So this is the first report for 15 minutes time frame. Okay, now let us generate the second report. What is the second report? The price direction. Now daily is HTF, is traveling from demand zone to all-time high. That means there are no supply zones for daily. What about 75 minutes? We have two conditions. First one is demand zone to supply zone. Second one, demand zone to all-time high. So let us set as it is, demand zone to supply zone. Only daily, only demand zone to all-time high. So we have 7 stocks. These 7 stocks are not having supply zones on daily time frame. But weekly time frame, all these stocks are having supply zones. And a 15 minutes time frame, one stock is not having supply zone. That's why we got dark green color. Now let us generate the third report for bullish setup. What is the third report? Even 75 minutes also traveling from demand zone to all-time high. That means both daily and 75 minutes time frame, prices should travel from demand zone to all-time high. This is the third report for bullish setup. So 14 stocks are filtered. So this is our 15 minutes time frame report for a bullish setup. Now let us generate bearish setup. Let's go back. Entry time frame 15. Now entry zone should be supply zone. So what about the trend? Because this is the bearish setup, daily trend should be either downtrend or sideways, but 75 minutes trend should be downtrend. What about price direction? We have 3 conditions. The first one is supply zone to demand zone on daily. Even 75 minutes also supply zone to demand zone prices are traveling. That means prices are traveling towards the downside. At the time we want to take a trade, that is bearish setup. So these 4 stocks are filtered, supporting the bearish setup for 15 minutes time frame. That is entry level. So now let us generate the second bearish setup report. What you have to do now? The daily time frame, that is HTF, they are traveling from all-time high to demand zone. Earlier supply zone to demand zone, now all-time high to demand zone. Such kind of stocks we want to evaluate. No stocks are available. Now what we do, let us check 75 minutes also. They are also traveling from all-time high to demand zone. Mostly you may not get. So no stocks. So this is about bullish and bearish setup stocks for the 75 minutes time frame. Now finally, before closing, we have to generate complete list of demand and supply zones for daily time frame. So entry time frame is daily. I am generating demand and supply zones for all the stocks. So this is the complete list. I have to keep on scrolling the list for the 201 stocks. So whichever the stock you want to refer, there you please pause the video and study. I'll keep on scrolling the list. So this is the complete list of all the stocks having demand and supply zones on daily time frame. I hope this information is useful to you. Let us all meet again in our next video. Thank you.